Happy New Year all, welcome to 2026 and welcome back to Finominal UK. To start the year off, I wanted to carry out a review against a fund that I found quite interesting in truth, as the story changes the deeper you go. So for our first product review of the year, we're going to be having a look at the Fidelity Special Situations Fund. To start with though, let's as always have an initial look at the fund manager's fact sheet just to get an initial understanding of this fund. So we can see it's quite a popular fund indeed, with just under 4 billion of AUM. And as you can see, I've already highlighted some of the key points already. So the manager favours companies which are likely to already have gone through a sustained period of underperformance, but the risks further downside is limited. I won't read all of this, but just to summarise, based purely on the mandates, contrarian, unloved stocks, recovery potential, unconstrained, this is not a growth or quality style strategy. So that means the most sensible starting hypothesis to test our analysis out in regards to benchmark selection would actually be a UK value benchmark, and then see whether that data supports or rejects that. Now, I had initially done this, so the fund manager actually selects the FTSE All Share Index as their suggested benchmark. But because the fund targets undervalued stocks with recovery potential, MSCI UK Value is a more relevant comparator than the FTSE All Share, which includes growth and quality exposures the strategy explicitly avoids. But just to note, this fund is not marketed as a value fund, but if we look at how investors typically allocate capital, this is the value universe it typically ends up competing with, really. So this strategy is recovery driven and contrarian. The correct question is whether it adds value relative to the value opportunity set. And that is a comment I put here that I wanted to find out. Has this fund delivered alpha beyond the UK value, or has it mostly delivered discretionary version of the value factor? Now, to further caveat the benchmarking, just to note on the tracking error versus the FTSE All Share for the UK value index, the tracking error is actually 6.69% for the FTSE All Share, but it actually rises to over 11% versus the value index. So that tells us this is not a systematic value strategy, but it behaves differently from value across cycles, which is exactly what you'd expect from an unconstrained recovery approach. Now, although tracking error is higher versus the UK value index than the FTSE All Share, that doesn't make the All Share the right benchmark for judging skill. So the value index is still a correct reference point for understanding whether the strategy adds value relative to a natural opportunity set. So now that's established, let's head over to Finominal for our full fund analysis. So initially looking to since inception data, we can see we'll select the FTSE All Share Index, and initially this looks like a fantastic fund indeed, very strong outperformance since inception against since the FTSE All Share Index. If we also look how this compares against the MSCI UK Value Index since inception, again we can also see very strong outperformance against its benchmark, with a compound annual growth rate since inception of 10.5. Now, let's actually change this though, because we've got a lot of history to analyse here for this fund. But if we note back to the fact sheet's objective, the fund aims to increase the value of your investment over a period of 5 years or more. So let's change this time frame to the last 5 years. Let's update this, and let's initially look how the fund has compared over the last 5 years against the value factor, as well the MSCI UK value, should I say, to be more specific, as well as the FTSE All Share. For the All Share benchmarking perspective over the last 5 years, we can see the Fidelity Special Situations Fund has outperformed the FTSE All Share Index over the last 5 years, with a CAGR of 13.6% versus the FTSE All Share at 11.46%. And if we compare this against the UK Value Index, we can see that the UK Value Index has actually outperformed the Fidelity Special Situations Fund at a compound annual growth rate for the index of 16% versus, as mentioned, the Fidelity's fund of 13.8%. But overall here, I'm quite happy with my hypothesis, is what I would say, quite closely tracking to the UK Value index, is what I would say on that. But let's continue with our analysis now, and as mentioned, we're going to stay now on the UK value index until we head over to sectors. So looking at volatility, we can see 12.8%, so slightly less volatility than the UK value, though not as high a Sharpe ratio as the value index, and outperformance consistency of 3 out of the last 5 years. Let's move now to asset classes and markets, where we can see a 86% allocation in equities and 13% in cash. Main risk-based asset allocation attributed to the FTSE 100 index with just under 61%. Breakdowns by top 10 countries, as we'd expect, 76% in the UK. We've also got just under 10% in Ireland as well, and some sort of small sliver amounts in Switzerland, Australia, and the United States and Greece. In regards to breakdown by market cap, fairly even split, 36% in large cap, 34% in mid, and just over 30% in small. And for sectors, I'm going to switch this back to the FTSE All Share just to see how this funds compares sectorally against the broader UK market. So I note strong underweights in energy, financials, healthcare and information tech, as well as consumer staples, and quite a prominent overweight as well in consumer discretionary. And just to note, the top overweight stock is Aviva, and the top underweight against the FTSE All Share Index is actually AstraZeneca. So interesting to note. Let's head over back now and continue our analysis on the UK Value Index, where we're going to go over to alpha and factor exposures. I am going to look at this since inception initially, to look at cumulative return-based factor attribution as well as cumulative alpha attribution, but initially looking to return-based factor exposures. Overall, I would say we want to look at this from equity factor exposures, where we can see negative exposure quite prominently to the momentum and quality factors is most prominent, is what I would say here. Let's look at alpha attribution now, where we can see cumulative alpha since inception has been 142.97%. That's been, as mentioned, since inception of the data we're looking at. Alpha consistency, 12 out of the last 19 years. And if we wanted to, we can look at cumulative return contribution, where we can see there's been cumulative alpha contributed from Feb 2015, according to this. Let's continue now and look at risk. Within the risk tab for the fund analyzer, we can then look at either look-through analysis, as mentioned, we briefly touched on that, but the main thing I want to look at is drawdown analysis and stress testing, how this fund compares against the UK Value Index in periods of actual drawdown. So based off of actual returns, we're seeing very nice downside protection is what I would say, comparing against the UK Value Index on an actual return basis. And because of the actual data we have here, I feel comfortable using actual returns. We won't need to replicate returns because of the data that we've actually got here. But now it's actually interesting to note, how this fund compares against other funds that are focused on sort of UK value. So the next part of our analysis I want to look at is actually comparing the Fidelity Special Situations Fund with other peers. So for example, I've gone over to the Fund Explorer, I filtered by mutual fund, smart beta, value, country, the UK. I've sorted by AUM, and I've then selected some of the most popular AUM UK value opportunity focused funds. And then let's see now how this Fidelity fund compares against those peers, as well as against a benchmark UK value index. In doing so, we can see again I'm still quite pleased with the hypothesis regarding the quite close with the value factor. But overall, it was actually outperformed against those other peers. So that is, of course, great to note, but still very, very close to that UK value index. there's also been periods where that's actually underperformed against that, as we saw in our analysis. But this is also a shorter time period, 2018. That is because of the Polar Capital Fund. As we can see, it's got a much more recent launch date. But seeing as this also had the most AUM for this, I didn't want to exclude it for that reason. So overall, we can see this is, quite a desirable fund, is what I would say. It's certainly got attractive qualities and such, but it's certainly worth noting that a lot of the performance of this could be attributed to the UK Value Index. So certainly something to worth noting for this particular fund. But that does bring me to the end of this product review video, slightly a bit more in depth, I'd like to think, than prior ones, especially in regards to benchmark selection. But as always, I do hope you found it helpful and informative. And if so, I do hope you will like and subscribe, and leave any funds or portfolios you'd like me to review next in the comments. Always keen to analyse more. But other than that, we shall see you in the next one. Thanks all, and Happy New Year.